This is a video about a unique trading indicator known as Step Channel Momentum Trend by ChartPrime. It's a tool that you can use to really tell the difference between a strong directional trend and a choppy sideways market. We're going to go over what this indicator is and how you can use it in your trading. If you happen to find value in this video, remember to leave a like. Now, to get started with this indicator, you first of all want to go to TradingView, the trading platform that I'm going to be using. If you need to sign up, there's a link in the video description for you to do that. Next, you want to load any chart you like and click on Indicator, then type in Step Channel Momentum Trend. It's going to be this one by ChartPrime. Ladies and gentlemen, this is the all-powerful Step Channel Momentum Trend indicator. It's a complete momentum framework that adapts to market structure and volatility in real time. See, a lot of the frustration with traditional momentum indicators like RSI or MACD comes from one thing: smoothing. They rely on smoothing to filter out noise, but that very same smoothing is what causes lag, which means by the time you get a confirmation signal, the move is already halfway done. This indicator is designed to tackle that problem head-on with what they call a structure-first approach. So let's break down what we're looking at. Bands are calculated using this indicator is the center line, which you'll note like a staircase for the price. You'll notice it doesn't curve or smooth like a regular moving average. Instead, it holds its level horizontally and only snaps up or down when the market creates a new confirmed pivot high or pivot low. This is the key. It isn't just reacting to every little price move. It waits for a genuine structural shift before it updates, which is how it avoids a ton of that lag and noise. Wrapped around this core midline are two dynamic volatility bands. These bands are calculated using the average true range, or ATR, so they get wider when the market is volatile and tighter when the market gets quiet. And finally, the most intuitive part is the candle coloring. When the price moves above the upper volatility band, the candles turn green, signaling strong bullish momentum. When the price drops below the lower band, the candles turn red for bearish momentum. And if the price is just chopping around between those two bands, the candles will turn orange, which is your clear signal that the market is in a low momentum sideways range. You'll also spot these little diamond symbols on the chart, which pop up to mark the exact pivot points that cause the midline to snap to a new level. Next, if we pop into the settings, you'll see you can customize this tool. The main setting you'll want to pay attention to is the length. This basically controls how sensitive the indicator is to forming those new pivots. If you're a swing trader who holds positions for longer, you might want to increase this length. That makes it less sensitive and requires a bigger, more significant move to confirm a new pivot. But if you're a scalper or a short-term day trader, you might prefer a lower length value. This makes the indicator more sensitive to smaller price swings, allowing you to spot potential shifts much faster. You can really tailor it to your own trading time frame. So how do we actually trade with this indicator? The most obvious way is to use the colors to understand the market phase. When you see the candles flip from orange to green, it shows that after a period of consolidation, the bulls have likely taken control and are pushing the price to the upside. For a bullish setup, you could wait for that breakout from the orange range, and once a green candle forms, that's your potential entry signal. You could then place your stop loss below the recent structural low of the range and let the trade run. And for a bearish setup, it's the exact opposite. You're watching for the market to go from that choppy orange state to a clear red-colored candle. This shows that bearish momentum is taking over. Once that red candle appears, that could be your signal to look for a short position with your stop loss placed above the most recent swing high. What's also really interesting is that the center midline itself often acts as an equilibrium point or a magnet for the price. So in a trending move, you might see the price pull back towards that midline, which could act as a potential take profit level or even an area to look for a re-entry. In summary, the Step Channel Momentum Trend indicator gives you a really clear visual map of the market phases. By baking structure and volatility right into the indicator, you'll know when to sit out, when to enter with momentum, and when to lean into an established trend, all with a lot less guesswork. It's a clean, powerful tool to have in your setup, whether you're trading trends or breakouts. Of course, remember, this is not financial advice. The strategy shown is made up only of indicators, and it's just an educational example to show how the tool works. You should always add your own price action or fundamental analysis to make informed trading decisions. If you found value in this video, remember to leave a like, or even better, consider subscribing to stay tuned. Thanks for watching. See you next time.